Hi there. Thanks so much for joining me today for the latest episode of Impact Real Estate Investing. My guest today is Rebecca Foster, the CEO of the San Francisco Housing Accelerator Fund. The Accelerator Fund is a public-private partnership that helps to finance affordable housing in San Francisco. In particular, the many buildings currently being occupied affordably that are in danger of being purchased and of their occupants being displaced. Be sure to go to evepicker.com to find out more about Rebecca on the show notes page for this episode, and be sure to sign up for my newsletter so you can access information about impact real estate investing and get the latest news about the exciting projects on my crowdfunding platform, Small Change. Hi, Rebecca. Thanks for joining me.
Thank you so much for having me. Yes.
It's really great. So I wanted to dive right in and find out all about the San Francisco Housing Accelerator, which you lead. And I saw that the headline on the Accelerator site says, Innovative Financial Tools to Preserve and Expand Affordable Housing. And I wanted to ask you, what are innovative financial tools? What do you employ?
Sure. So what our goal was in creating the Accelerator Fund, and I think a key piece in our origin story is actually we were created and incubated out of the mayor's office in San Francisco. And so we are truly a public-private partnership. And I think especially in the world of affordable housing, that's a fundamental component of what makes us effective. So we bring together private, philanthropic, and public sector funds to address gaps that the public sector can address with its sources of capital alone to achieve its affordable housing goals. And so in terms of innovative financial products, what that really means is that, for example, you can't really finance permanently affordable housing, especially in a high-cost city like San Francisco, but really in most places around the country, without permanent subsidy funds from the public sector, because the amount of rent that a extremely low income, or in the case of the Bay Area, even middle income person can afford to pay just isn't enough to cover the cost of building or acquiring a building, let alone some of the operating and services costs if they are extremely low income and need services support. So you really need the power of the public sector and the tax base, essentially, to cover those long-term permanent costs. But it's probably no surprise that government does not move very quickly, and it's hard for government to deliver their capital really quickly and to take risk with it. And so that's where we come in, is with private and philanthropic capital. We are able to be the first money in that can, for example, in the acquisition of a building where residents are at risk of displacement, we can help a nonprofit compete with all cash buyers and foreign buyers and close on a loan in less than 60 days, get to approval for a loan in less than 45 days. And that's really hard for a government to be able to do. So we essentially can provide that bridge. And then once the building is controlled and in nonprofit hands, the city can come in 12 to 24 months later with permanent funding. And then we can do something similar with new construction and just really use our capital to be much more innovative and allow the nonprofit affordable housing developers to move faster, be creative, try construction innovations that it's harder for the public sector to do.
So do you, I've worked enough in these types of projects to know that gap can be really substantial. Even in Pittsburgh, I think a few years back, it was really a 40% financing gap between what it costs to build an affordable unit and what return you would get for that unit. So 40% in government subsidies, I can't imagine that isn't a bigger gap in San Francisco and the Bay Area.
Yes, I mean, it is, you're absolutely right. It is, just for order of magnitude, the average cost of a new construction affordable housing unit in San Francisco ranges between $500,000 and $800,000. And depending on the income level of the residents in that unit, the subsidy required can be, if you include the low-income housing tax credit, so federal and state subsidies and local subsidies, it can be nearly all of that cost. The local government generally bears, in the case of San Francisco, about $200,000 to $300,000 of that total cost. So a similar percentage, but I think the total costs are a similar percentage on the local level, but the total costs are probably much higher.
And does that means that traditional banks don't want to be involved at some lower level?
Yeah, so basically we have many banks actually invested in the Accelerator Fund as senior lenders, and so they are involved in our fund in the bridging at a senior level, and then we have below them funds from foundations and from the city of San Francisco itself. But in the permanent financing, yes, banks will both provide a construction loan, but they provide a construction loan when there is clarity on what the permanent stabilized funding source is, which will include a significant amount of subsidies and often low-income housing tax credits. And then if the project is supportive housing for individuals who've been experiencing homelessness, generally there isn't much revenue that can support a senior mortgage on the permanent. But if it's a 50 or 60% median income project or, workforce housing, if there is enough in rent, then there often will be a bank that's providing a senior mortgage. It's just a relatively small percentage often of the entire capital stack.
So you must get frustrated listening to some of the rhetoric about building affordable housing and who's to blame for where we are. It's a really big problem.
It is a tremendous problem, but I guess I also, it can be frustrating, but I also, part of why I love my job every day is that we are on the ground in a real blocking and tackling transactional way, and in a way where we see the impacts on families. We are producing and preserving affordable housing every month with projects. And so that's a counterpoint to the feeling sometimes of how overwhelming the level of systems change is that's necessary to actually address the hole that we have dug ourselves into, particularly in California, with so many decades of undersupply of housing, especially in urban infill housing, not enough density, tax codes that don't really encourage rental housing and affordable housing. I mean, we have a lot to dig our way out of, and I think we can do it.
Yeah, I mean, I just spent a little time in Australia talking to an architect who's working on affordable and sustainable housing there. And it was really fascinating to hear the story of what got them to this place where essentially there's no government subsidy at all. And, the major cities in Australia are some of the most expensive in the world. So I think the problem is huge in many places. We know it's huge in San Francisco, but I think people are attacking this in many different ways, which we'll talk about later. But I wanted to first know, what's your impact been to date, and how long have you been in business, actually?
Yes, so we are just about at our 3-year mark. So we are still very much a startup, but we've done a lot, and the need has been great in the last 3 years. So we have really 2 primary programs, or I guess 3 primary programs to date. And the one that we really started with, and then I would say is our most significant, is the bridge loans that I mentioned, where we help nonprofits or affordable housing developers buy buildings often, or land that is on the market, on the open market. And in the case of the buildings where the residents are at a very high risk of displacement, and just for a little context there, we have rent control in San Francisco, but there's no vacancy decontrol. And so basically when a unit becomes vacant, the rent can go from, if there's been a long time rent controlled resident living there, can go from, say, $1,500 a month up to market to $4,500 a month, depending on the size of the unit. So that in a market like this means that there are a lot of buyers that are looking to buy 5 to 25 plus unit buildings and either very aggressively push the existing residents out who are low income or wait them out. And so we are just experiencing tremendous displacement. So we have, with our bridge loan fund, have funded the preservation of 319 affordable homes since we started. That's across 15 projects.
Wow.
And we have committed across those projects $183 million of capital across those projects, plus an additional vacant land acquisition for the production of new affordable housing. And we have also separately, so that's our bridge loan fund, and we basically raise capital, deploy it for nonprofits to go buy these buildings, also to rehab them, do the structural upgrades so they're seismically safe. In any instances where it's possible, add new accessory dwelling units. So turn the garages or the carriage houses in these buildings into new permanently affordable units. So we've also financed the first permanently affordable accessory dwelling units in San Francisco in a couple of our buildings that we've funded in the Mission. And then we separately have another fund, the Homes for the Homeless Fund, that's in partnership with a great local organization, Tipping Point Communities, and that is funded with $50 million entirely of philanthropic capital. So our other capital is impact debt, basically, but it is not, we have to repay it. And in this case, this fund is a $50 million restricted grant, and the entire goal for those dollars is to significantly cut the cost and time for the production of supportive housing for individuals who've been experiencing homelessness. And we are halfway into the development of a 146 unit building in the Soma neighborhood in San Francisco that has 145 supportive housing units and a manager's unit, and it will, knock on wood, the total development cost for it is going towards under $400,000 a unit, including land, which is, as I mentioned before, a really significant reduction from the status quo. And our whole schedule is 2 years and 9 months from the time we bought the parking lot until when we should have individuals be able to move in. And that is, there are many factors there. But I'd say in both cases, really what we are, we've deployed a lot of capital, and what we're really focused on is like, what can we do with every single project to help our partners both just get it done and make sure the building isn't lost and the homes aren't lost in the case of the anti-displacement work and preservation, but also to do it better every time and figure out how we can do the next one a little bit faster at a lower cost or with different capital sources that make it more sustainable for the government to support this work over the long term.
What about construction in the equation? Are you sort of looking at different construction methods as a way of becoming more efficient?
Yes. So for the project that we are working on, that's the new construction supportive housing project, we are using modular construction. And this will be the first permanently affordable modular project in San Francisco. We are working with Factory OS, modular manufacturer in Vallejo, and that is one of the many factors that is helping us cut the time and the cost for the project.
It's interesting. And so what's the long-term goal for the Housing Accelerator?
I'd say so. When I mentioned that we really focus on three things, we have the bridge lending program, which really is about just helping the government, the city, achieve its goals with much more flexible capital and faster and problem solve. And then we have the supportive housing work, which is really more flexible investment focused on bringing down the cost and time of the production of housing. And then the other big area that we're focused on increasingly as well is innovation in how capital can be used to really help push the envelope in getting more affordable housing done and getting it done faster, kind of more of those systems change elements I mean, I'd say within the circle of the delivery of capital and dollars, which is really I think, where we're focused. And so for long-term goals, we have really ambitious goals about getting to 1/3 of our existing multifamily building stock in San Francisco, where there are low-income and extremely low-income tenants. We have a 20-year goal, along with our nonprofit developer partners, of getting to 1/3 of those units being permanently affordable. So like building more of a social housing stock or preserving more of a social housing stock on the preservation side. We're also starting to work with other partners in the Bay Area about how they can build out similar preservation programs in their cities, because unfortunately, San Francisco has been at the tip of the spear with displacement. And I think it's rippling out to, a number of other places as well now. And then I think on the partnership and, the investment and construction side, I mean, we're looking at any way, as I said, that we can be really creative and problem solving focused and capital delivery that can cut costs and time, so that the long-term permanent gap that the government puts for affordable housing can be reduced, and that we can get more housing done faster. So to your question about innovations in construction, we're looking at, are there ways we could support construction innovation where traditional banks and governments aren't yet comfortable with taking on risks in this industry so we're looking at creating some insurance or backstop products for modular housing.
Oh, interesting.
We're also looking at other public-private partnerships, which I think is another key part of our model. So we're looking at working with the school district on educator housing and philanthropic partners, and, trying to, in some ways, and then just getting more done in San Francisco in the work that we're doing and continuing to improve upon it.
So it's great hearing you talk about all of this, because I think most people think, an affordable housing unit is just the structure, but there's so much more to it. There's how do you finance it, and how do you build it, and how do you insure it, and all of those things. Have you estimated, I'm sure you have, how many affordable housing units are needed in San Francisco?
That is a great question, and everyone has different numbers. So I think on the preservation side, we are focused on preserving for the lending program 15,000 units in San Francisco, and that's our, based on the data that's available, getting at about 1/3 of what seems to be the at-risk, generally rent controlled, lower income, extremely low income units. And on the new construction side, I don't have the number at my fingertips, but when we started the Accelerator Fund, the goal was, this was in 2014, 2015, when the initial ideas were for the fund were getting incubated in the mayor's office. We had set out at the city to build 30,000 new units of housing by 2020. So by the end of this year, which now we're here, with half of them being permanently affordable. And I think the city will be close to meeting that goal by the end of the year, knock on wood. And it's clear that it is not nearly enough. I mean, the last study I saw regionally is that we need about 250,000 more units of affordable housing in the 9-county Bay Area just to make up for what we haven't produced over the last decades. And so, I mean, the numbers are staggering. And so we can't do it if we have to be reducing the cost and the permanent gap from the government in every possible way we can. And I think, I mean, another piece here to focus on is the revenue side. We also have to, we need to also be addressing how extremely low income individuals and low income in our workforce, what kind of opportunities they have to actually be earning enough or be supplementing their income in other ways so that they can afford rent.
Right. It's a huge problem. So
yes,
it's really big, and it sounds like you're attacking it from all sides. So what's your background and how did you get to this position?
it's been a meandering path. I'm sure, like many people's, but I have always really, I've always really loved communities, and particularly the way that people interact with their environment and like the built environment. And I grew up in a very rural place on the river. My parents had a campground, and although that's a far cry from the urban landscape, I think the thread there was that it is in that case, the campground and the river were really a physical gathering place and like a hub of community. Mm-hmm. And I think similarly in a place like San Francisco, I mean, this work we're doing on preservation, you just see, although a building might have 5 units in it, 5 families, one of them is the, a marine biologist who tends the local community garden, and another family moved here from Central America 27 years ago and have built their lives here. And I mean, the ripple impact of everybody's story in these buildings and what it does to community when they are displaced. We just helped our partner close on a building in north of the Panhandle of Golden Gate Park on December 23rd that has 6 senior citizen African-American couples in the building. And I mean, that's exactly the kind of situation where they have built their lives here. Their friends are here, their community's here, and they are an integral part of what makes the fabric of San Francisco the place that everybody loves. And so I think there's that connection. I mean, it's like the connection of people to place, not just the big fancy architecture, which also is really cool, but the homes that make up these communities and how that all ripples out to, make a place a really unique, special place it is, I think that is a common thread. And then from a background expertise perspective, after I went to business school, I went to business school because I had zero background in finance and felt like I started to realize in my work in urban development that I needed that. And then decided at the end of that to go really try to solidify what I had started to get at graduate school with real world experience. And I spent 8 years at Goldman Sachs as a public sector infrastructure banker in New York and then in San Francisco, and then left there to go to the mayor's office in San Francisco. And so really feel like now I am in this professional opportunity of a lifetime to be able to be entrepreneurial and creating something that connects capital to solutions in communities. And it's been really fun and challenging.
It sounds like it. So, I wonder, so we kind of heard what real estate impact investing is happening around the accelerator, but I'm wondering what difficulties you see with it and whether you think, Peter, people still need to be better educated about what sort of returns to expect and, what it means to invest in something that isn't just a commodity, right?
Yes. I mean, that is an excellent question. And I think one that's very top of mind right now because we have had, fortunately, more of the largest employers in the Bay Area have started to focus on the tremendous need locally, even though these are global companies. And I think often in many ways had not really been focused as much on their local communities and are now, I think, both because it's the lack of affordability and the housing challenges are a real issue for their workforce across the spectrum of their workforce. And because it's just, the extent of homelessness is really painful, and you can't exist in the Bay Area and not be feeling every day the impact of the level of poverty. And I think also of the dissonance between being at the center of wealth and innovation, arguably in the world, and the level of poverty.
I was going to say that's the most shocking part, the fact that it's one of the wealthiest places in the world and has this incredible homeless problem.
Yes. And we all have to take so much we got to fix it. And I think, when we started our fundraising, we talked to a lot of national foundations, and it was frustrating at the time, but I get it. Many of them said to us, we're sorry, we're not going to invest in San Francisco. You have so much money there. You got to solve your own problems.
Yeah.
And I think to some extent that's true. Like, we have to address this in the Bay Area. And I think that is becoming more front and center for folks. And that being said, to your point about the kinds of returns you can expect and the education question, we still have some work to do on that front, because you can't make money off of extremely low income people.
Yeah.
Yeah. There is the potential to have some, high risk appetite, get your principal back and get a 1 or 2% return type, funding. We certainly have that sort of capital in our bridge loan fund, but that's only as valuable as the amount of permanent gap dollars that the public sector has or that are available to address the needs of permanent affordability. And so I think the power of what you can do with flexible, philanthropic, and private impact-focused capital is take a lot of risk, try new things, innovate on construction, do parallel track on your design work before you have your entitlements, allow those types of things. And that means you might not always get repaid. It is more risk. And I think that's a hard balance to sort of figure out. And
it's actually something I struggle with. I don't know if you got a chance to look at my crowdfunding platform, Small Change, but I get asked all the time how the platform might help affordable housing projects. It's a very difficult thing to answer for exactly the reason you said. The more return you provide to investors, the more rent you have to charge. It's very problematic. That's not really the goal of affordable housing. But I've seen people tackle it and still manage to get some investment in just some different ways, but it's difficult to watch. I wish I knew with certainty that if we put affordable housing projects on the platform with a 2% return, people would invest. But I don't really believe that yet, Yeah,
I think it is we've had many brainstorming sessions with various partners about, what about affordable housing and workforce housing? Your risk of turnover is minimal. And so the risk is significantly lower. And so we have, talked through before, could we get, pension funds and larger institutional investors to really look at this more like infrastructure than real estate, market rate real estate returns. So that's one angle that we've talked about with folks. The challenge still is it's very low. It's 1 to 2% and it's long term. And, until there's just...
It's got to be people and institutions with enough wealth that particular investment isn't going to impact them too much.
Right. And where there is, I think there, and it's a very true double bottom line. And then where I've seen it work, in some cases with crowdfunding, one of our partners, Mission Economic Development Agency, did a crowdfunding raise for a building acquisition that had a beloved mural in the Mission Bernal neighborhood, the Precita Eyes mural. And when there's I think there is a benefit, especially because it's so local, of, engaging people who care about a place in investing in something that makes that place vibrant and diverse and the community that they love and want to be in. Although that may be, in many cases, I think the other challenge with crowdfunding is the cost is so significant of housing that raising $20,000, which could be a lot of people with a lot of small contributions, is probably more meaningful in terms of engaging people in the work than it is in terms of actually moving the needle financially for the project.
Yeah, although I think of crowdfunding as a couple of different securities rules, and you can crowdfund or advertise Regulation D as well, which lets you raise as much as you want. So, but only through accredited investors. So, but I think, the small crowdfunding, retail crowdfunding that everyone can invest in is useful from a community building, asset building point of view. It's not a way to raise a lot of money, that's for sure.
Right. Yeah, one area we're looking at, where there could be overlap a little bit with the crowdfunding ideas, how we could create a product for investing in affordable housing that's coming through donor advised funds.
Yes.
So really, it's already the dollars that people have allocated to philanthropy, and generally there's a lower desired return threshold, or they're just not as focused on it. And so, and there are a lot of dollars in donor advised funds nationally, of course. So that's an area that we've started to look at more, that it would be great for us to continue the conversation on.
Absolutely. So do you think socially responsible real estate is necessary in today's development landscape? I know you're focused on housing, but in general.
I mean, I to the extent, and you can help me with the definition of socially responsible real estate.
I don't even really know it myself. I mean, I think there are a bunch of different definitions out there. Mine is, something that makes life better for people. It might be a building that houses services that they need, or it could be a building or a space that is created that they can use. I mean, I think there's many ways to define it in real estate for me.
Yes. I mean, absolutely. I think especially in the trends toward urbanization, and there are so many more people, and I think probably will continue to be so many more people that are living in urban environments. And it is, I think, as everyone feels like viscerally yourself, what your day-to-day interaction is with the space that is your home and your community and your walk to transportation or your commute to work and your interaction in your place of work with the space that you're in. I mean, that's what makes up a big portion of people's lives. And so I think it is totally fundamental that we are all thinking about making that positive and thinking about it in all of the ripple impact ways, from a sustainability and climate perspective, and how people interact, and an affordability perspective. I mean, there's so many elements in addition to affordable housing that improve the quality of someone's life versus their rent costs that are very much tied to space, their commute, their job environment, the quality of their schools, and these are all tied to urban design and the use of space and the buildings that fill the space.
And I think the ability to live somewhere and not have to have a car is absolutely critical. Transit.
Yes.
Transit, being able to walk to amenities, walk to work, walk to school. It's really critical for living affordably. And actually, I wonder how successful you've been when you've been sort of making your numbers extremely lean in getting your units to be very energy efficient. Has that been hard?
So a lot of the work we do, as I said, is helping developers buy existing buildings, and part of the upgrades are focused whenever there's enough, capital budget for it, on window upgrades and kind of those types of weatherization and other things that will improve energy efficiency. And then in the new construction buildings, we are not the developer, but our developers are definitely focused on those things. And I think just by nature of, there's no parking in affordable housing. There's always bike storage. They're generally, luckily in San Francisco, near and have great access to transit options. And I mean, one thing that is we are doing to bring down costs in our new construction project is the individual unit sizes are smaller than
more efficient,
some supportive housing studios are. Yes.
Yeah. Interesting. Okay. Yeah, it's a little bit harder when you have older buildings. You have to retrofit them because you just can't seal them as well. You can't really get as much energy efficiency as in a modular box that you're thinking about that from day one. They just weren't built that way. Yeah.
Right.
So wrap-up question: Where do you think the future of real estate impact investing lies?
I think definitely, as I said, where I think that private capital can be, from my lens, in affordable housing can be the most impactful is in really coordinating closely, working with somebody like us or others that coordinate their dollars and the repayment of their dollars very closely with public sector dollars that are the permanent financing, which is a huge risk mitigant for their investment. And so, I think in the case of San Francisco, it has a AAA credit rating. So investors really should feel comfortable as bridge lenders with taking on a fair amount of risk if they know that the city is a partner of ours. And so, and that can then allow us to help the nonprofits move much faster, to have one single funding source that could be extremely high loan to value ratio, for example, and not have to pull together many different funding sources. Just anything that we can do with bringing in that private capital and them really understanding how mitigated their risk is by the existence of the permanent capital at the back end, I think then can help us deliver on greater efficiency and get them their goals of repayment, and also move towards our goals, bringing down the permanent gap and getting more housing done faster and more cost effectively.
So you've really bitten off a huge project, and I'm really impressed and very grateful that you took the time to talk to me.
Well, I love the work you're doing, and it's so great to be able to lift my head up sometimes and hear about what others are doing, innovating in this space around the world. So much appreciate the documenting and sharing that you're doing with the podcast.
Well, thank you very much, and we'll sign off. Thanks a lot. Bye.
All right. Thank you. Bye.
That was Rebecca Foster, CEO of the San Francisco Housing Accelerator. What a huge challenge she has set herself. The Accelerator wants to save 1/3 of the existing 45,000 affordable housing units in San Francisco over the next 20 years. And they're using a variety of financial tools to make sure that rents remain affordable. In just 3 years, the Accelerator has saved 319 homes and raised $183 million in capital. You can find out more about impact real estate investing and access the show notes for today's episode at my website, evepicker.com. While you're there, sign up for my newsletter to find out more about how to make money in real estate while building better cities. Thank you so much for spending your time with me today, and thank you, Rebecca, for sharing your thoughts with me. We'll talk again soon, but for now, this is Eve Picker signing off to go make some change.